The following is a presentation of TFNN.
It's a beautiful thing. Welcome, folks. Steve Rhodes, Tom O'Brien, all you tigers and tigresses growling and prowling out there. We really appreciate you being out there with us. Right now, you get the Dow down 24, Nasdaq's up 1, S&Ps are up 2.5. We have gold down 670. Silver is down 43. We got, look at those bonds. 143.26.
Oh, baby.
Only up 4 ticks today, folks, but that 144.27 is on the agenda, okay? Apple still can't hold price here. Your Apple is up $5. You got it up flat right now. And King Dollar, folks, is up 14 ticks at 79.73. But I'm sure...
had a heck of a night.
We know, man. You know, you got to love this, folks, okay? So, you know, I just walked into the studio here. But even walking in, when I say we know, I know that he was looking at it, I was looking at it.
Absolutely.
The euro got absolutely smoked. King Dollar was going to the moon. The S&Ps were down 15, okay? And let me tell you something. By the end of today, see ya. Don't want to be ya. It ain't even close. It's just not even close, man. I mean, I love it when they have the, you know, you smoke it, you bring it back up, just gives you another shot to go after it again.
Yeah.
And the
full moon, baby.
Oh man, we were howling too.
Okay.
We were howling. I had people.
So not just full moon, super full.
Super full moon. We had it was great. Friday night. Yeah, Friday night we were howling. We're outside howling. I had company. We had everyone howling.
Oh, that's good.
Okay,
that's good.
And
that's
then
good.
Saturday night we went into the Taste of Pinellas, and we were howling in there too.
Good. Now you know Mark called on Friday. You know, and asked about, you know, Go Long America.
Look at this.
So I went out and found a USA shirt.
I love it.
We got our King Dollar shirt.
Perfect.
So.
Perfect, man. That is perfect. You got to love it.
We listen to our callers.
Yeah, totally.
Right?
Totally. Yeah. That is a beautiful thing. And, folks, this afternoon, and that's what I was doing right between this afternoon at 2:10, I'll be on with Brian Sullivan on CNBC. So they just come over. Yeah, they just come over this morning. That's what was happening in between. That's why. Oh man. So Europe, you know, they saved Europe from disaster.
They did.
They did. I mean, you know, look at the CAC Carol. The CAC Carol was down about 2%, right? Ended up coming all the way back. Yeah, she opened at the swing point, 31.04. And she's at 31.83 right now. That still doesn't give her anything. Now, she has to get back inside 32.17.
They're liking the fact of 75% tax rate.
Oh man, let me tell you.
Go after those rich people.
Let me tell you.
It's intense.
It is intense. The euro is intense, man. The euro, you know, stuck its head through that first. Oh, actually, it stuck its head right through it.
No, it did. Yeah. I mean, it came all the way back to February 16th.
Yeah.
You know, tested February 16th, tested March 15th, tested April 16th, and so far has rejected that area.
Yeah.
But still got a gap down, you know, and setting up a larger ABC down.
Yeah. No, big time. Yeah. I mean that, and if it closes. Even at that where it opened, that's going to be trouble, and that's only
yeah.
Well, actually,
not where it opens.
No.
It's got to get back down.
Yeah, lower.
You know, otherwise maybe it's going to set up a little consolidation here.
Yep, you know? And there's a lot happening in the world, man. There's a lot happening in Europe. Let's put it that way.
That's right. Yeah, big time. Absolutely.
You know, because the euro, my take is the euro is dead meat. You know, Greece is going to be the first ones to go. It's going to be interesting to see how the French deal plays out in the context of, you know, what happens between them and Germany.
Yeah.
You know, because that's going to be the battle. That's going to be the battleground. Because the bottom line, folks, is that
Germany's not making any friends, apparently, with their neighbors.
Well, bottom line is that, you know, you only can... party for so long, man, and they want to continue to party.
They do. No.
Nothing wrong with that when someone else is paying for it, but you know what? I think it's getting close to the end here.
Yeah. What I said this morning, as I said to folks, that economic disaster begins with a philosophy of doing less. Okay, doing less and wanting more. Yeah. And that's what it is, when I take a look at what they were really doing last night.
Right.
You had Greece saying, I know we made a deal, but citizens, we want to reject that.
That's right.
Right, and, right now in France, that may or may not be the direction they also want to go in.
Right, right. Well, so
it's like, wait a minute here, you want to do less and you want more.
Yeah. And then there's only so many folks that you can squeeze. That's what it really comes down to. Then there's no more folks to squeeze. And when there's no more folks to squeeze, you got to start the whole thing all over again.
Exactly.
Let's get to Michael in Colorado. Hey, Michael, what's going on?
Hey, guys, how are you?
We're doing great. You having a good day out there?
Oh, yeah, we got a few inches of snow. It's coming down. It was 88 2 days ago.
Snow?
I saw it in the den. Snow. Isn't that amazing?
Oh, my goodness.
Yeah, it's wild. But it'll be gone by Thursday.
Now, I didn't hear. Are you in Colorado? Not in Colorado. Are you in Denver? In Denver, or where was the snow?
Yeah, snow's up in. I'm at 8,000 feet. I'm up in Boulder.
Okay.
Nice.
Very cool.
What are we going to look at today?
Looking at JVA.
JVA. Okay, so wholesale coffee roaster, primary business.
I've been looking at this, and it's, if it's made a move off that high volume a few days ago on a short term. Well, no, not a few days ago. Well, that was in March.
Oh yeah, this is one of the psycho stocks. I remember this.
Psycho stock. Yeah.
No, it is, and in fact, you guys all in Colorado, you guys are the guys that have been pushing this.
Oh, really?
Yeah.
I don't know anybody pushing it, but
they were pushing it big time. I remember this really well.
Nice volume at the tops of each of these peaks.
Oh, he's pushing it. He's pushing it big, man. You are, man. You're not kidding me. Listen, the last time this went, folks, it went from $4 and they spiked it to 30, and then they cleaned everyone's clock and brought it back down to $4 again. So here, let me see. So, what do you like about this stock?
Well, I just was looking at, I'm looking off your price and volume mostly on it, and it looks like it's coming down with a lot less volume.
Yeah, it is. It is. Let me just see this. What happens is that I always get really skeptical. See, I remember this when it first came out and it got pushed. So to me, that was a strictly pump and dump, and sure enough, it was. It went from 4 to 30 back to 4 ASAP. Okay.
Yeah, that's wild.
So when that happens, I'm always cognizant. Okay, who's behind this? And so let's see. Just give me a second here. 189. Okay, so you get a spike. Same thing. See, this is psycho. I wouldn't touch this stock. The stock last week, 2 weeks ago, went from $7 to $14. They cleaned their clock again. I wouldn't touch it.
Okay, cool.
Have a great one, man. Have a safe one.
Thanks.
I'm going to pull this. See, you know what's oh man, I'm telling you, isn't it wild? You know what's so crazy about stocks like this, folks, is that you can actually change the management of them, and I've seen them 4 or 5 years later, even when the management has changed, and they're still out of their mind. So picture, what makes a stock go from $7 to $15 and get croaked again? Well, it's a pump and dump. And they do take $183 million in a quarter. I don't have enough time to look at the rest of it right now, but bottom line is I wouldn't touch it.
Yeah.
Oh, here's another one I won't touch either. Oh, my God. Let's go to Bill in Boston. This is the untouchable day, folks. Hey, Bill, what's going on?
I'm doing great. How about yourself?
Well, I'm doing great, man. Are you looking to buy, what are you going to bet your money on Putin today?
I thought you had mentioned something about Russia with this stock a while ago, and, I'm just looking at it. I know it's got that high volume low going back on a monthly, going back to October of 2008.
Well, we're talking about here. Let's tell the folks what we're talking about first. We're talking about Ken Ross Gold, folks. Okay, And Ken Ross Gold, you know, I used to follow Ken Ross Gold quite a bit. And then it was so cool because the CEO of Ken Ross Gold, Bob Buckham, I did an interview with him live. And he told me the mess that they had in Russia and that he got out. And then what ended up happening, he left the company, and the next CEO came in and went right back into the mess.
Yeah.
And then made a bigger mess. And so if you want to see what kind of mess it is, folks, so check this out. Gold's at $1,600. Well, you know the high of the stock is $31, and it's trading at $8. Don't touch it.
Okay.
This is what the deal is. They put. Did you ever hear Bob Buckham when he talked about it?
I thought you haven't talked about that in a while, but I thought I remembered you talking about that.
Okay, so this is the story, right? So picture this, folks. Bob Buckham, incredibly smart guy, still in the business. In fact, we made a fortune with him. ANV, okay, when Vista spun off ANV went from $4 to $27. It's trading at $27 right now. We got that for nothing. Bottom line is this, is that, and this goes way back now. I'm going back to like 2005 or 2006. I was interviewing them, and they were doing a big mine in Russia, okay?
Yeah, yeah.
And what happened is that he had explained, he did this live, folks. So he did this live, I didn't have TV then, but I was right next to him at the Money Show. And what he's explaining is that he had already put $52 million into the mines, right? And he says, and this was when Putin was coming back, when he just came in, he changed all the governors.
Yeah.
And he said, so when he showed up there, right, the first thing they had to do, of course, is drink a quart of vodka. It's 8 o'clock in the morning, right? So they're drinking their vodka.
Now I remember, yeah.
Yeah, well, I guess that's business as usual. I'm not saying anything's wrong with that, okay? But then this is what they told Putin. This is what Putin's guys told Bob Buckham, Ken Ross. He says, listen, bottom line is that we're changing the deal right now. You got to do this, this, and this. And they thought they had him strung out, meaning he already put so much money in it.
Yeah.
And Buckham said he ended the meeting there, he got back on the plane, and he canceled everything. Shut it down. Bottom line, what ends up happening, folks, they're never going to get their gold out of the ground. Once the difference in taking companies over with the yeah, you stay right there. Steve Rhodes, Tom O'Brien, we're coming right back.
You know, X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get them, folks.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here, folks. We're talking with Bill from Boston. We're talking about Ken Ross Gold, KGC. So if I go on with the story, this is how it went. The way that one of the main reasons that you know how like when countries are taking over businesses, right? They take over the oil businesses very quickly, the gas businesses very quickly. The reason, folks, is that once they're built, they're pushing out money on a continual basis. What you'd be banking on if you're buying KGC, Bill, is this, is that when those mines get done, you're banking that Putin won't come in and take them. My bank is that he's going to let the billions get spent and then see you later. See, you don't want to be you. So I wouldn't be touching KGC, period. It's not even close. Oh, I must have lost him. But that's how,
okay, yeah.
In the industry in general, folks, okay, that is always a large risk. In the mining industry, it's even a larger risk because of the money that's up front. And if you just thinking on just a common sense basis, you're not going to take it over and go spend the money.
Right.
You let them spend all the money. You let them keep the carrot out there. Yeah, it's going to be great. It's going to be great. You know what I mean?
Yeah.
And you know, the bottom line is it's not. And one of the targets is saying the Russian money is a small part of KGC, and it's not. It's not even close. They've been banking on 3 different deals out there when they bought BGO. Anyway, the bottom line, you can just look at the stock. That says it all. If you're what are you going to be? Gold's got to be at $10,000 for it to go back to its high. It's $8. There's something wrong. So
absolutely. Okay,
man.
What about ABX? Can you just look at that quick and I'll hang up?
ABX?
Yeah.
Okay, I'm looking at it.
Same. It's a different scenario, though, right? I mean, it's
so this stock's gone from 52 down to 37.
Yeah.
Okay, so
tell me on the horizon.
I'm sorry?
Is there an entry point on the horizon for this, or?
Yes. $17.
Wow.
Is this low? Is high volume low at $17, man? I know. Listen, I know it's serious business. There's something wrong.
The trade inside that swing point right now?
It's trading inside the swing point already. Once it gets inside the 39.23, there's something wrong here, man. That's the bottom line. And you know, when I look at what these are trading at versus what the price of gold is at, okay, and the amount of money that's in the sector, they're selling it, man, and they're selling it in a big way. So, you know, you want to. There's a few of them that are cool, but those aren't the ones, man. You know.
Okay.
Okay, man. Have a great one. Have a safe one.
Very good. Thanks. Great show, guys. All right,
thank you.
Bye.
It's you know, there's some serious problems inside that sector.
Yeah.
They just
there is for sure.
You know, look at it. We go over to Gold Corp, right? Gold Corp's making another lower low. I mean, we're talking about this is
good stocks.
It's absolutely blowing my mind. Let me tell you something. I've been through a lot of these corrections, right? But this one is a total mind blow. But there's something else that's going on inside here that, you know, they want to go test. And this is a bizarre, folks, but they absolutely want to go test the lows of 2008. And that's the way it just seems to be shaking out right now. You can see Gold Corp. Let's see the high. Well, this will be pretty cool because Gold Corp will be the next one. Now, the Gold Corp's coming into the 33 area. We're at 36. If it can hold 33.85, then we get, you know, then we could have something. Okay. Yeah. The rest of them haven't, though.
Yeah. So, you know, as long as we're talking gold, let's take a look at the gold contract. Let's take a look at how gold, you know, was behaving last night.
Right.
You know, where you had, you know, it seemed like currencies, you know, crashing down or over in Europe,
yeah, big time.
You know,
big time.
So, what's your take on gold and how it actually wasn't like there was a flight to it?
No, there's not.
You know,
there's not.
absolutely not.
There's not. There's a flight.
And if ever there would have been an opportunity, it certainly would have been last night. I think.
Oh no, I agree. But you know, the correlation, the direct correlation, flat out, is the U.S. dollar to gold. And the euro. The euro is in inverse relationship to the dollar. Gold is an inverse relationship to the U.S. dollar. And I know people get hung up that, oh, the dollar's this, the dollar's that. Folks, everyone wants the dollar, okay? Just look around the world for a second, okay? That's all you got to do. It's like, you know, and so where's the competition? Because that's all. What matters, folks, is what is the competition, okay? And we don't have competition. Okay, you can go to China, they'll lock you up. You can go to Europe, you're on vacation. Okay, you can go to South America, they take over your company. Okay? I mean, no, what is really cool here, folks, when you really think about it, right? This world is getting much easier to decipher.
Yeah.
It is.
Yeah.
I mean, it's
this is the place you want to be,
Go
baby.
on, America, baby! Steve Rhodes, Tom O'Brien, appreciate all you tigers and tigresses growling and prowling out here with us. And Steve's going to take the last half hour, folks. I have to write up something for CNBC.
All righty.
You have a great one and a safe one.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. And if you are just tuning in to us, Tom had to go run. He's going to take the next half hour. He's going to take a little bit more than that. But you want to tune in today to CNBC. Tom will be on at 2:10 and with Brian Sullivan on CNBC. So he's preparing for that. And yes, I believe he is going to be wearing the King Dollar hat. Well, no, but maybe that's what I got to find is where do we put our Burger King hat around here. Now, what you want to pay attention to, folks, first is, following this show, you got Basil Chapman. So at 11:30 today, and maybe Basil will be taking a look at it. If not, you certainly want to be taking a look at it, is where does the DAX close? Because in overnight trading, what the DAX has done here, number one, it's come back and it's tested the October 20, in this case here, October 28th on the DAX, October 27th happens to be the swing point in the U.S. that you want to pay attention to. We know that there's a volume there. I don't get a good enough volume here to be able to give that to you, and didn't get a chance to get that from Tom. Tom's is delayed as well. But what you can see, what you're paying attention to now is first the swing point, the most recent swing point that we're looking at. Let me make sure I give you the right date here. It's going to be the April 23rd area, 6499.07. You're trading right now at 6525.79. Now, you traded well below that in the overnight hours, so in its session. And if you do get a close below that, then you will, then it's going to come down and it's going to at least test that October 28th area again tomorrow. But what you have here is, and I'm guessing, from a volume standpoint, not that I want to guess, but it looks to me like what you've got is a confirmed AB equals CD down on the DAX, and that AB equals CD down is likely going to take into the 59, I would say 59.90 range, 59.70 range. If we take a look at just simply the retracement, let's just go to the retracement off of the lows going back to September 2011. So let's take a look at that retracement, see what that would look like. Let's come right off of the actual low up to the high that was put in here. And if we take a look at that retracement, the 0.618 area would get you right in there at that 58.17. So actually, I gave you a figure of 5900 or so. I reserve judgment. I'm gonna say that if we do get a confirmed AB equals CD down, what we're going to take a look at in the DAX is going to be somewhere in that 5750-ish area on the DAX. But first, what we got to do is the DAX has to get below the swing point from April the 23rd, and preferably from the short side, you're looking for it to get below the October 28th area. That actual swing point high is 64.30.60. That's on the DAX. If we do take a look at what went on over in Japan last night, over at the Nikkei, what we would take a look at here is it's made a 0.618 retracement after making, just a beautiful move off of the bottom. The bottom that I'm talking about is the one off of November 25th. That was a low that was certainly put in our marketplace as well. And if we take a look at that from the low of November 25th, well, I guess I should probably get rid of a couple of things out here. It'll be easier for you to follow on Tiger TV. So if we take a look at the low from November 25th all the way up to the high that was put in here on the 30th of March, what you can see is that actually the 0.618 of that area has got further to go. You've got to get down into the 89.40-ish range. You closed at 91.19 last night. Now, what you've got, and I don't have the volume on this, I wish that I did for you, but you certainly have one heck of an AB equals CD down pattern on this that's going to take you right into the 0.786 retracement area, more like 85.95. At 85.95, that's where I would be setting my targets to start taking a look at taking a long in some of those Japanese stocks, say, for example, Sony. And if we go take a look at the currency, see if the currency, the yen, is behaving the same way, and we'll take a look at where the yen was trading in the currently right now, and certainly in the overnight session, U.S. dollar, Japanese yen, not much of movement there. But I've got the 30-minute chart. Let me put the actual daily chart. It'll be a little bit easier for us to review and take a look at. So here is the A to B equals CD down on the Japanese yen, which will take you into the 77 area. That's also going to be a 1-to-1 A to B equals CD, and it could do even more, but at least a 1-to-1 A to B equals CD down. That would also take you into that 0.786 area, which would be 77.61. The yen right now trading out at 79.80, 86, 88. Let's see here, what's the trade down at? Actually, 79.87. Yeah, 79.87. That's on the yen. So you want to be able to line these things up. You want to be able to line up the currencies along with the actual index itself. Let's go take a look at our ETF structure out here. We can take a look at the four, and we'll start with the small caps. So let's start with the IWM. Take a look at where it's trading into. Number one, first it's trading into the April 23rd hammer candle. That is the most recent swing point low. The low out there is 78.31, the high of 79.16. You're trading at 78.73. Volume-wise, let's see, been trading for a little over an hour. So in the first hour of trading, you've done 16 million shares. Mathematician here would say that would be about 16... 636, about 100 million shares if it could keep up the same intensity. And what you did here on April the 10th, where you've got the high volume low, you did 101 million shares. So what you're looking for today, you're looking for it to either bust through or come into this area with volume. The low on that swing point is 78.14. And again, you've only gotten down so far today to a low of 78.62. It's also trading inside the March 6th swing point. That swing point there has 80 million shares. So you've got an area here. Really, the area of testing is going to be, I would say, from the you're looking for a close somewhere in the 78.41, anywhere down to maybe even 78.14. That's on the small caps. If we take a look at the other ETFs, let's go take a look at the Qs out there. We take a look at the Qs. Let's see what we also have trading now. Apple is now down $1.47. No big great shakes there. We'll go take a look at Apple. Apple is the one that you're going to want to pay attention to if you are trading the Qs. Why? Just simply because of the percentage that it makes up of the NDX 100. So you've got the Qs right now trading out at 64.54. The volume so far today, 17 million shares. So my quick math on that says you've got about 100, potentially again about 100 million shares. What did you do On Friday, you did 107 million shares. So you still got volume in this thing. And what you're looking for here is in my opinion, you're looking for to see what happens when you get down to March 6th. The high on March 6th here is 63.72. It's also right now really coming into the swing point. So you take a look at the volume. The swing point that it traded into on Friday was the April 24th area. That only had 49 million shares. And again, you were coming into that with 107 million shares. You got down below that so far. But 49 million shares, and as I said, so far today, you've done 17. So it's going to have the volume to be testing the swing point low there, too much volume to be a rejection of price if it decides to, in fact, do that. If we go take a look at the diamonds next, diamonds are next up on our screen here. And if we take a look at the diamonds have acted the strongest. So the Dow, of all the four indexes out there, in my opinion, the Dow has been the strongest, even though it's off 65, 66 points right now. What the Dow is doing is coming back into the March 6th area. That March 6th area has 14 million shares. What you have done, you're really trading right. The high on that is 129.46. You're at 129.47. So, you're tinker toys right now with it. Now, the volume in the first hour, 1.5 million shares. That equates to only about 9 million shares. That 9 million going into 14. So the diamonds are going to need more volume to push lower. And if you were a bull, you'd like to see it push down not only into that, you'd like to see it push all the way down into at least the 129.07. That is the April 10th area. That also has 13 million shares, and you don't have the volume yet. We'll go to the intraday charts here in a minute. Let's first go ahead and finish this out by taking a look at the SPYs and take a look at the setup that we've got on the SPYs. And the setup on the SPYs goes like this. The SPYs trading into the swing point from April 23rd that had 171 million shares. Now, you came into that swing point. Did you get all the way down? Let's see. The low was 136.92. The high of that swing point was 136.91. So it stopped 1 penny below that. Now, again, that was 171 million shares going back to April 23rd. And it was coming in with 193 million. So you're coming into that swing point with more volume. That was as of Friday. If we do the simple math here right now, you've done 45 million shares in the last hour and 15 minutes. That sets up a couple 100 million shares. So, you're going into that 235 million shares. And the release of information, when you get down there, what it's going to do, and what has not been tested on the SPYs, is March the 6th. Even on the push down on April 10th, even though it was pushing down with more volume, still couldn't get down there. On the push down, the gap down on April 23rd, it couldn't get down there with volume. And so you've got, as far as the volume you have at March 6th, you've got 200 million shares. And so if you just did a straight line math, and these days, with the volume that comes in during the last 5 to 10 minutes of any session, I'm not really sure how you really calculate volume other than, continue to look at it each hour, each half hour or so. So you've got the SPYs trading out at 136, 138. Let me just see exactly what it's 136.59 right now. Let's go take a look at the intraday. And when we take a look at my intraday, there's right now set up for 5 minutes. Let's go change these to 10-minute charts. Let's keep it consistent with the Money Masters show. And so let's take a look at the SPYs first. We left off with the SPYs. Let's go ahead and see what we've got volume-wise with the SPYs on the 10-minute charts. And on the 10-minute chart here, the SPY making a 1 to over a little bit over 1 to 1.618. A to B equals CD down. The 1 to 2 on that actually would take you to a price point of 136 and a little bit of change. Let's go ahead and erase that. And let's take a look at what it's doing. So when the SPYs gap down this morning, its biggest volume during that first 10-minute session, 9.2 million shares. You're trading inside there right now. So now you're looking to get some information released to you as it gets down to a low of 136.46. That's from that first 10-minute session this morning. You're trading out at 136.66. Now, you're not seeing any significant volume at all on the as it moves down here, and it's got another 4 minutes left to finish out this 10-minute session. You've only done 2 million so far. Looks like it's going to do somewhere short of 4 million. That's going into 9.2. So that doesn't have the volume right now to push down. If we take a look at the small caps, let's change this over to a 10-minute chart as well here. And on the 10-minute chart, you can see the 1 to 1.272 A to B equals CD down. That took you to a price point of 78.72. That's what it did as it gapped down this morning. Do I have the 10-minute up? I do. Let me get rid of some of the other data that's on here on the screen. So in that first 10 minutes, you got down to a low on the IWM of 78.62. You did that with 3.9 million shares. You stayed down in there with 3 million shares. Right now you're coming in there with lighter volume. You've done 730,000 shares. That's going to do less than 1.5 million. It has not tested that area being 78.62. So far the low of this session is 78.67. So that'll be your next release of information on the small caps. That's on the 10-minute chart. That's on the intraday chart here. If we take a look at, let's go take a look at Apple, see what Apple is actually doing here, because I was about to go over to the Qs, but if I'm going to go over to the Qs, let's go see what Apple is actually doing. Here we go. So we pull up the Apple chart. So Apple trading out right now at 562.94. Let's pull this over here, and that is inside the swing point from April the 24th. That had 38 million shares. Now, Apple was not coming down with enough juice, with enough volume on the Friday session. Friday session was 18 million shares. Today, though, you've done 7.3 million shares. So it does have the volume today. 7.3 million shares says you could do 40 million shares. So now you do have Apple coming into the swing point, and it's coming into two different areas, folks, that you want to be paying attention to. Number one is coming into the swing point that was out there from April 24th. April 24th. The low there, 567. 555 even. My apologies. 555 even. You're trading out at 562.97. It's also trading into the breakout area, which was really March the 13th. March the 13th, you did volume of 24 million shares. Apple gaps up the following session, gaps up there with 50 million shares. But the volume right now, if volume does pick up in Apple, it's going to have more than 50 million shares. And if you are long Apple, what you do not want to see is you do not want to see a close below 555.75. Of course, we know that the swing point low was 555. So let's say you don't want to see a close below 555, which is the April 24th area on more than 38 million shares. Why do I say that? Well, if you just take a look at the A to B equals CD down on Apple, let's take a look at the larger one out here. That's going from the April 10th high all the way down to the low on April 24th. The 1-to-1 A to B equals CD on Apple will take you down to 529. That would certainly make sense because that's really your next swing point that's out there. It's also where you have your next high volume area, which goes back to February 15th when you did 53 million shares, and your high out there was 514.26. That is on Apple, but Apple, I believe, if it confirms an ABC down, will trade much, much lower than that, folks. 877-927-6648. Dow's off 50, S&P's off 3, Composite off 7. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. You see that Kentucky Derby? That was a great race, and I wanted Phil to call in last week just to tell us who the favorite was. And so, we'll see if we can get a Triple Crown winner out there. Like King Dollar, that's a Triple Crown winner. I was asked to take a look at the XLE and for a possible entry either in the Doug or the Dig. So let's go take a look at the XLE. That had been one of the weakest sectors inside the S&P 500. And we do have out here this line going across the top. That is the October 27th area. So just as we were taking a look at the October 28th area in the DAX earlier in the last segment, October 27th, October 27th on any of the stocks or ETFs that you trade is an important area for you to take a look at. That just simply shows how weak the sector is here. That is in the energy sector. Now, what you see happening today is the energy sector. The XLE is trading underneath its most recent swing point, which is April 23rd. The low there, 67.68. That had 17 million shares. So we've been open for an hour and a half, 90 minutes, almost 90 minutes. You've done 5 million shares. 5 million going to get 17. Unless the volume just totally drops out of this thing, this is going to be another confirmed AB equals CD down. That's after making the first ABC down as it came off the top. If we take a look at that, A to B equals CD. Our A point out here on the XLE was up at 76.50. That was on February 24th. I believe if you go take a look at the 24th, 25th, or 26th, you will see that ExxonMobil gave you a bearish engulfing candle up at its highs, and ExxonMobil is a substantial portion of the XLE. I don't recall the percentage off the top of my head, but it's in the 30 to 40% range. So if you are trading either the dig or the dug, you want to make sure you go take a look at ExxonMobil. You want to make sure you're looking at Schlumberger, Chevron, and probably Occidental, but at least the Chevron, Schlumberger, and ExxonMobil. Now, what you can see here is this made a beautiful 1-2 A to B equals CD down that completed at 67.65, and then it had a nice bounce as it made that. But that's all that it was. Now, when I say a nice bounce, if you take a look at the low that was put in here at April 23rd, what you can see as it started making its move higher, look at how you had some decent volume. You had some accelerating volume. But here's where it started to fail. Look at on the way down here, and look at how you also had volume picking up. In fact, you had more volume picking up on the way down. So the XLE, as it was moving back down, at first it looked like it was a decent retracement. That's going back to May the 2nd. But then you had volume picking up on May the 3rd. Then on Friday you gapped down with even more volume. Today you're underneath the swing point with volume. That's setting up a larger A to B equals CD. Which one would you take a look at? Well, the largest one that you could take a look at on the XLE would go back to the original swing point, folks. The one that is out here on February 24th, all the way down to the low that was put in on April the 23rd. And your C point is the May 1st high. That May 1st high was up in the 72.77. So a 1-to-1 would take you to 64.07. But take a look at how this is now coming off of the C point here. That sets up more like a move to 61.70. If you go take a look at where this last has volume, that's really what it's trading into right now. In fact, and you always want to make sure that you're taking a look at any chart, anything that you trade. You want to make sure that you take a look at the volume bars that are out there. Well, if you take a look at the November 1st candle, folks, what you will see out here is the XLE has 41 million shares. You're trading inside that right now. That's, in fact, what the high on that happened to be 68.48. And on Friday, you closed at 68.30. So you closed inside that. It says it wants to at least get down and test the bottom of that, which would be 66.34. Stay tuned, folks. You've got Basil Chapman following us, and we go out to Tucson, Arizona. Larry Pesavento all the way back here from 3 to 4. Make sure you tune in to Tom at 2:10 p.m. today. He'll be on CNBC with Brian Sullivan. Have a great day, folks, and I look forward to seeing you tomorrow morning.